Hey guys, it's Billy here. Today's Saturday, April 16th. And here I am just making you guys a new video. Yes, I've been getting a lot of requests on email and also on the chat, regarding, the level system and the move prior to the move and that type of stuff, guys. Um, and today I just wanted to give you guys something to work with, right? So you guys could start developing your own way of looking at the market and and so on. So, your own unique way. So let's just look at the charts here, guys. As you guys see, it's bare bone. I have no indicators, whatsoever other than the weekly EMA on 10 SMA, the 21 EMA, and 50 SMA on the weekly. And then on the daily, I only have the 5, 9, and 21. I usually use the 50, 100, and 200 because those are what institutions use and where institutions come in, and buy and sell the stocks. It all depends, if it's trading above or below and things like that. So, all right. So let's just go over. So I picked Apple as an example. Um, and let's just go through the price action here, guys. First of all, I want to go through the day before. Right, guys? So we're not talking about having a plan of attack, setting up or, plan of attack prior to the market opening. So what we're trying to discuss here, it's just like how to be able like to identify, the levels and the move prior to the move, you know, as things are already taking place, right? So first of all, guys, let's just start with what we always do. Okay, consolidation, right? First push, first test, first rejection. We start with that. And then the next consolidation right there, right, guys? And then we have this next swing high here. And we have this consolidation, which it's kind of a bow wedge. So whenever I see things like this, I do want to, mark the channel, right? And so what else we got here, guys? We got this channel that held pretty good, right? See how it held as a support. It broke by a bit, but it was never confirmed, right, guys? We have this side over there. And then a lot of times, guys, you guys can see that I try to avoid the wicks, and sometimes I use the wicks. So it all depends on what I'm looking for. If I'm looking for, because if you start tackling the wicks, that means you're targeting volatility, right? And once you target like the candle bodies, it's more of the price action itself, right? So, and okay, we got in this consolidation here, in this push, and in this push right here. Let's just right, guys? So this was the price action on Thursday, the 13th. I mean, Wednesday, the 13th. I'm sorry, guys, because, we had a short week. So, all right, let's just, just scroll over. And this was actually Wednesday, the 13th. Yes. Let's get into the 14th, guys, and see what happened. And as you guys could see here, so those levels from the prior days, from the previous day, you guys could see how it, it was all tested and held perfectly over here. Then it tested the lower level, right? And then it pushed into this level here almost. And then, it came down, broke, and retested, which is the move prior to the move. Before it, if it's going to continue down, it has to retest a previous resistance, a previous support that now was taken out and turned into resistance, right, guys? And then it came down, and then it broke by a little bit, pushed back up, right? Because we can start doing the same thing over here, right? To predict those bounces. And then, if you put a newer low, just draw that level, guys. You guys will see how it works. And guys, as we always talk about the move prior to the move, right? If it's gonna go down or go up, it has to make a certain move prior to the move. That's what we always talk about. You guys can see here, it pushed back to previous resistance, rejected, came back down to previous support, rejected this little resistance right here, and then slowly but surely continue down, right, guys? And then, just by using the level system, we already know, okay, so this is a place where for some reason it's not drawing in at the right place, guys. But as you guys could see, it's the move prior to the move. It pushed right into this level here and then came down. We marked this level. It bounced right off of this level, pushed right into this level, guys. This consolidation here, right? And came down. So by you guys just recognizing, these moves, guys, and how it works, like, you guys don't even need to draw like these levels. It happens automatically. To me, it's just like when I look at the charts, it's just like automatic. And like you always do, guys, right? Pre-market highs, that's always a level that we mark. Lately, it's been, for the past like 2 years, a lot of the trades has been, gone off of pre-market highs and lows. So, and with this, we can go back, we can just clear the chart here, guys. Just so because you guys could be like, oh, but it's okay, it was the day before. No, let's just go back to, okay, to April 8th, right? Let's do the same thing we do. This consolidation, I love it. Okay, this low here, I love it. And this was retested. I love it here, right? What do we have next, guys? We can't forget about this first push, right? So, and then we have this level that pushed. And then we have this consolidation here. And then we have this level here, right? And then by the time we were done with this level, guys, like right here, you guys could see like that was the whole trade, right? And okay, and let's just like draw this level right here. Oops, it didn't draw in on the right place. And want to show you guys why I'm drawing this level. So why am I drawing this level, guys? Simply because pay attention to this. You guys see that? It's not just like going anywhere, guys. And pay attention how it works. Pay attention to the move prior to the move, guys. In the move prior to the move, it doesn't matter if you're watching the 1 minute chart, the daily, the 1 hour, the 2 hours, the 195 minutes, they are all the same. They all got to do the same thing. So it's basically just thinking of this as um, a daily chart, right? Now let's just go into the next day and see what happened. Okay, I see that we had a gap down. Okay, all right, we went lower. We basically almost, right, guys, tested this level right here, which based on our, strategy, we're not too concerned about, our biggest concern is entering on red candle if you're buying puts, right? Okay, so which and the standard risk, we would have gotten this trade right here. But okay, but for now, let's just leave. I just want to see what happened. Let's not mark like these levels, like this pre-market lows and stuff. And just so you guys see, guys, look at this pre-market level. You guys see it bounced right off of here, and then this head and shoulders here, guys. Head, shoulder, quick shoulder, right? Okay, let's just like skip and see what happened, the day after. Of course, if you're going to continue to gap down, so those levels are not going to work. But guys, just pay attention to this. We didn't mark any level lower, right? Like I said, just pay attention to this. Wow, what was that, guys? Wow. What happened over here, guys? What did you guys do? Magic? Wow, that was some crazy magic, guys. Something I've never seen before. And pay attention, guys, how these levels, they bounce, they all work again, and if you guys utilize my system with the standard risk, guys, it's just basically because we didn't mark like any lower level, like I had said. If you guys use my system with the standard risk, like you know the odds are pretty high that the trade is going to work, right? Plus, remember, halving whole number, guys. So believe it or not, guys, it's something that, like I just realized it um after I started like working with you guys. It's that when you have the grid on, like every level here, it's like halving whole numbers. Halving whole. That's why I left it on for you guys. So just so you guys know, okay, so if you guys are grabbing a trade, like um let's say here, and you guys know, okay, if you guys using like 50 cents as your standard risk, which is nothing, you guys know like either that's your stop or a place to add, or you guys know it's right at the halving whole number approaching. So which is something like I said, I'm even embarrassed, as a seasoned trader, to say that, but I always liked my chart like very clean. So and I was not aware of that, guys. So guys, that's it for today. I'm gonna leave you guys with this. I'm pretty sure it's gonna give you guys some work to do and some things to figure out. And like I said, we're not using the VWAP, we're not using the 50 EMA, which are all indicators that institutions do use, to daily trade. And that's it. And our system, guys, previous high of day, previous low of day. See, it would have worked. Previous high with the pre-market open, with pre-market high, boom, short all the way down, long here, right within the standard risk, and a very small, our first target, which was right this consolidation, which was right at this level right here. And we got a head and shoulders. It's also recognizing the patterns, guys, recognizing what the market's doing. Head, For some reason, this doesn't want to work now. Oh, okay, had left shoulder. Right shoulder, guys. Sorry, the drawing is not it's not beautiful, okay? But you guys see, right? Had shoulder, shoulder, boom. And then what happened after, guys? This support, previous low of day, turned into resistance. This isn't bye-bye, right? So this is the make it or break it guys, for the reversal, right? So that's it for today, guys. Hope you guys enjoy the weekend with your loved ones. Have a great Easter. Get some rest, and Monday we'll be right back at it, guys. Thank you. Have a great one. Take care.